we didn't get a breakdown of how they're broken down in terms of combustion engines, hybrids, and electric vehicles. I'd like to get an understanding of how it breaks down in those categories.
Yeah, Oliver, thanks for coming to Berlin. Yeah, you talked about the new models.
Yeah.
The new models play a really important role in going into the year 2024. 2024 will be a challenging year. We have macroeconomic environment is like uncertain. We have interest rates still high, on inflation on the cost side, and there's a lot of competition in the BEV markets. But there are also positives. The market will grow slightly, and we bring some great new models, specifically on the BEV side. E-Macan will be a great one. Q6 e-tron will be a great one. ID.7 Tourer, very important models for the respective brands. And these models, as an example for 2024, will bring us a significant positive tailwind for 2023. There are also new combustion engine models hitting the showroom, specifically from brand group Volume and brand Volkswagen. A Passat, a very famous one, Tiguan, a very important one. And that shows that we are in the transition phase to electrification and digitalization, and we are convinced the future will be electric. We have a certain flexibility and the customer can choose.
And I think that everyone agrees, I think you would agree, that the destination has not changed in terms of electrification, but the rate at which they're traveling there, I think everyone has been surprised by how much slower it is than had been anticipated. What do you think needs to happen to reinvigorate electric vehicle demand, and what is under Volkswagen's control to get people into battery electric vehicles?
No, you're absolutely right. We are convinced the future will be electric, and we are preparing accordingly. But different markets develop in different pace. China is developing rather fast towards electrification. In Europe and US, slightly slower. But we're convinced with more models available, both in the premium segment and also in the volume segment. And as you know, we bring also a 25,000 euro car in 2026 with more affordability of electric cars, and also with the increase of charging infrastructure. We will gradually see an increase of the BEV share in the overall market.
And do you think that so it seems like regulators and consumers maybe want different things. Do you think 2035 is a realistic target in Europe to get rid of all combustion engines?
Look, as said before, we have really an ambitious transformation plan towards electrification, and we are planning accordingly. Up from here to 2025, it's up to the customers to choose. But from a regulator side, we need stability, and we have that stability. In Europe, we have a decision, and we are planning accordingly to 2035 run out of combustion engine cars. And this is how we set up our investments.
And then in terms of the cost cuts going forward, because if it's not going to be a very strong growth year and maybe pricing power isn't where it has been the last couple of years, you're going to have to focus on costs. Where are the cost cuts going to come, and can you get VW to where it needs to be on margins?
No, you're quite right. I said 2024 will be a challenging year, but we launched really ambitious efficiency programs, not only in brand Volkswagen, also in brand group Core and the whole group, and they will be very important to support our profitability. Look, Oliver, we are in an industry in transformation. We have great products, but in order to be able to powerfully invest into the future, we need sufficient profitability. And the cost improvement has to come from, at least the major part has to come from the fixed cost side, overhead costs, other fixed costs, also improvement in productivity. These are the things we are looking at.
And thinking a little bit about also your growth and your future, obviously China has been an absolutely crucial and immense market for Volkswagen. However, it's basically flatlined last year, 2% growth only when you did 20% in the US and North America. What is your assumption for the Chinese market over the next 12, 18 months? Is it that it will not really contribute that much to growth?
So this is a very valid question. To understand it, I must give you a little bit of broader view. We launched a catch-up plan in China. We realized we brought great products, but we had to catch up. We have to catch up specifically in driving assistance function, in in-car infotainment, also we need cheaper batteries, we need LFP batteries. All the competitors have LFP batteries. We have more expensive one, NMCs. And we launched this catch-up program. And in addition to that, we bring two new cars, on a platform from a partner, but these measures will take until 2026. And along with our value over volume strategy, we are deliberately prepared to give up market share in the next, I would say, 1 to 2 years, 2024, 2025, in order to find a sound compromise between margins and volume. But from 2026 onwards, we want to regain share also in the BEV segment.
And so by 2027, let's say, where would you like to see market share for battery electric vehicles in China?
The battery electric vehicle market share in 2027 should approach like from 2027 onwards the share we have currently in the market in average.
Okay.
But not from 2024 to 2026, but rather 2027 onwards.
And in terms of, obviously we have this EV probe going on from the Europeans into China. Are you concerned that that is going to come back as retaliatory tariffs with some of your models that you produce in Europe going over to China?
Look, we are a global company, and we stand for free trade, we stand for open markets, and this is where we stand for, and this is what we advocate for.
And in terms of, are you excited about having an F1 team in the Audi portfolio?
Haven't you enough?
An F1 team.
I'm excited. I'm excited. Look, there are two hearts in my life. Yes, it's a great opportunity for Audi, but there are also costs incurred, and we have to compensate for that on the cost side in terms of the efficiency programs. This is what I can say.
And then about the sort of one sort of topic that's not the most glamorous in the car industry, but it's the residual value of EVs, which is obviously we've seen fall off of a cliff and has huge implications for everybody. It's a massive market. How do you put a floor under the residual values, and how do you diagnose what's happening in the secondary market for battery electric vehicles?
Now, the residual values have come down slightly, but they are still rather healthy. If you compare the residual values with the past, you have to take into account that we come from a period where we had not enough chips and not enough new cars. So the residual values were driven by extraordinary high used car prices. And these prices have come down significantly, both for the combustion engine cars and the electrical cars. So it's more like a normalization. And second, if you calculate the residual values, they are often calculated, or they are theoretically calculated from the list price to what you get for the used car. But in a lot of European markets, there are subsidy schemes with thousands of euros in place. So most of the customers don't really pay the list price. So if you adjust for these factors, the residual values in the BEVs are on a rather healthy basis.
And just very quickly, despite a challenging year, what is going to be the biggest growth market for you guys this year?
The biggest growth market should be North America, should be US. We have unique chances to grow profitable in the US this year, 2024, and the years to come, and we really want to seize this chance.
And that is even before the introduction of the Scout, which I'm very much looking forward to.
You're quite right. This will then boost 2026, 2027, I must say, will give another boost in our US.
Right. Well, Arno, Antlitz, thank you so much for your time today.
Thank you very much.
Thanks.